Caller, is there
down.
something I can help you with?
I'm trying to help you. Like
There's
you're sitting here
nothing
yelling at
you
me.
are doing to help me right now. You're taking
okay,
away
so
from some kid out there trying to call in about some real life shit, and you're asking me about if I've peaked and if my hair. I'm not yelling at him, guys. I'm just.
I mean, you are yelling at me.
I'm not yelling, caller.
You are yelling at me.
Go ahead, caller. You're on the air.
I wanted to know your opinion on inflation, because if we take into account that like most of the money supply was printed in the last year, why are we not really seeing inflation? Because it's not really reflected in the CPI, right?
Inflation, but okay, here's the thing about it, right? There is no way of actually getting an inflation, right? A number. Like there's no way of actually hammering down what is inflation, how it's affected, who's it affected by, in a general sense. You can dissect it into micro economics and look at like certain areas, but
Sure.
Inflation, the idea of inflation is the overall value of money, right? So for example, if the price of things goes up, but the demand is the same, right? Then there is inflation. If demand goes up and the supply is lower, then you're talking about a supply demand issue. You're not talking about an actual currency inflation. There's several other factors. I'm trying to get to a point. My point is that here's the thing. The way the government looks at inflation, like core CPI or like inflation, they add in a lot of different factors. You can add in, depending on how you're doing, you can add in the price of vehicles, you could price in of homes, you could do the price of commodities, you could do energy, you could do groceries. There's so many ways of doing it. For example, right? When you're looking at inflation, you want to look at, the overall picture, but if you can take some things out, for example, like I said, if you add in the price of vehicles and the price of groceries together, it looks like we haven't had any inflation because the price of vehicles has gone down because not as many people are driving or needing to drive, so there's not as many people buying vehicles, therefore the prices go down. But the price of groceries has been going up. Find me a stat out there that doesn't show that the price of groceries has gone up significantly across the board in America over the last 12 months. It has.
Yeah.
But if you measure the core inflation, it's going to look like it didn't go up because simply the value, looks even. But if you look at somebody who doesn't give a shit about buying a car, then for them, inflation is runaway at this point. That's one way of looking at inflation. Another way of looking at inflation is what is the value of the dollar based on what the world trades currencies at, okay? So, for example, you're trading most currencies trade against the US dollar, and the petrodollar is what keeps, global value as well. So, the question is what will other currencies look at our currency and trade against, off of the belief, right? Inflation is about the belief. Just like any value of any currency is about the belief of what people are willing to believe it's worth. What are other countries willing to believe our country's worth? Sure, we might be printing runaway, money, and, you've got the Fed buying up all that debt basically at interest and saying, hey, well, interest rates are at zero now, but, at interest and saying, hey, you got to give this money back. Private investors are buying up that debt as well. And then on top of that, other people are having it so much worse right now that it's holding up the value of the dollar. Not to mention the fact that the GDP is out there doing significantly better in the US than it is any place else outside of maybe China. But even they're talking about a slowdown. EU just double dipped a recession. Okay. Now, I'm throwing so many things out there because there's so many different factors to look at the way inflation works. Another way of looking at it is going into debt necessarily an automatic inflationary trigger? Yes and no. I'll give you an example. If I borrow $200,000, I'm in debt by $200,000.
Yeah.
If I buy $200,000 or borrow $200,000 and I open a restaurant, and now that restaurant employs people, and those people now, pay taxes, they do all their thing, but that not only did I open it and employ people, but now I become profitable, right? And I pay back that loan. Now, I'm not only paying back that loan, I'm also creating jobs. I'm also providing a service. I'm also making money that I'm now spending with other vendors and other, they're paying taxes on it and so on. So technically, you can borrow money, but as long as people believe that you're either A, going to pay it back, or you're going to use that money to continue economic growth down the road, it doesn't really cause immediate inflation. The idea of immediate inflation is borrowing money with no intent to pay it back or no intent to actually use that money for a good cause. So the idea of the value of the dollar is several things, but one of the ones that international is the money the US borrowing just a handout to people that they're just going to go gamble and they're going to do whatever? Or is that money going to go to something that is going to forward the economy and actually grow the GDP, meaning that the economy is growing? Therefore, if you can offset the growth with the debt doesn't really cause inflation, especially since it's all just numbers in a computer out there.
Okay, because I thought like the theory that a lot of people have is that a lot of the money is going in the hands of the rich right now, which you can see throughout equity markets like the stock market and real estate market, where the prices are going up like nuts, but that consumers aren't really spending as of yet because
that is a concern. And like I said, it depends on where that money goes. If that money goes and it's parked offshore, then that can actually lead to inflation. Small amounts, because you're talking about billions when we're talking about trillions, right? But if that money goes and then there's taxes paid on it, and and people that are super wealthy use it to start new businesses or to acquire new businesses or to buy extravagant houses and helicopters and fucking planes and stuff like that, then it is not inflation. It doesn't really, cost inflation in the short term. However, if these people and these firms make all this money and then they take that money and they hide it offshore, they park it somewhere else, then they've sucked value out of the U.S. Economy. But at the same time, if you're talking about equity inflation, that's a whole other thing than actual costs of goods and services. If somebody gets a whole bunch of money, borrows it from the government, throws it in the equity market, inflates the equity market, sells for a profit, gives the money back, and then dumps that money somewhere, that doesn't really have a core inflation impact unless they're buying, some kind of crazy shit out there. You're talking about money in the hands of people that then proceeds to go into goods and services, and it causes, a supply demand issue. There's more money and there's the same amount of demand and the same amount of supply. Therefore, the value goes down. So there's a million different ways. I'm losing everybody right now. I'm so sorry. I went off on a fucking tangent, and like 3 people understand what I'm saying because I'm like talking about a million different things at once. I'm sorry, guys. I'm so sorry. I'm literally just like throwing like 7 different things and different theories and trying to explain how, because I think that the biggest problem with understanding money and value and economy and economics is that everybody wants a very easy to dissect, cookie cutter answer that gives them an understanding, but it's so much more complex. Like there's this idea out there that if we keep printing money, money's going to be worthless and we're going to have wheelbarrows of money to buy a loaf of bread, right? And that sounds easy to understand, and it'll rabble, stop printing money because I don't want that to happen. Then you have the other side that says, just print as much money as you need because it's just money. It's not real. It's just numbers in a computer, and you have UBI and give everybody money, and then everybody can buy stuff, and then everybody's happy. Well, no, it's not that simple either. There's so many intricacies that go in this that it's not that easy. But I think people want to have an easy to understand answer, and that's good and great. But at the end of the day, all that does is it leads to just the wrong interpretation of how value works.
So what's your easy answer?
Easy answer is to what? What is inflation, or how do you stop inflation?
How do you trade considering inflation, like with that in mind?
How do I trade with inflation in mind? Are you talking about core inflation, or are you talking about equitable inflation?
If it's a concern in the next few months that everyone's like, oh, there's going to be a hyperinflation because we're printing so much money, blah, blah. Like, is that something that you keep in mind, or do you just
No, because I don't see hyperinflation happening. I think that, here's what I'm going to be honest with you. I think poor people are going to get poorer. I think that, and the reason I say that is they're going to make the same amount of money, but the costs of things are going to continue to go up. We've already seen Procter and Gamble and several Smuckers and others already say that they're raising the price of feminine hygienes, diapers, the whole 9 yards. Food's already gone up. Essentials gas is already going through the roof. Essentials are going to go up. So the value of your money is worth less, right? Because that's basically inflation. So inflation is going to hit everyday people a lot. It's not going to hurt people that are rich because they're going to beat the inflation within core inflation simply by using the market for hyperinflation. But because they're two separate entities, they use the market to make double the amount of money at double the rate of the increase of consumer goods. So they're never falling behind. They're only one step ahead. I think I lost 95% of you guys, and I'm sorry.
Yeah, I think the chat is a bit confused. But good educational segment though.
A lot of people are just giving me thumbs up like, yeah, sure, Stocky. I went on one of those fucking like talk show rants right there, and I didn't mean to. All right, next caller. Let's see who we got here.
Mr. Stock Guy, how are you doing today?
I'm good, caller. How can I help you today?
Well, considering this recent week you've had that's been very, impactful to your overall well-being, specifically being canceled and the amount of negative press that you've had, losing your sponsorships, several sponsorships at that. It's quite clear that you've been becoming more volatile and
I'm
angry.
not volatile or angry.
See, you're already kind of.
No, that's frustration. That's not anger.
It sounds a little bit like anger. I mean, you did well on CNBC. I know that you were stressed out by that. You got support from your idol, Kramer, and really, I'm just wondering, like, have you peaked, and is that what you're concerned about? Like, you've reached this plateau, and you're possibly starting to lash out at your community.
Caller, I peaked during GameStop back in January. It's been downhill since then.
Dead cat bounce, right? So you peaked then, and then
Caller, is there
down.
something I can help you with?
I'm trying to help you. Like,
There's
you're sitting here yelling at me.
you are doing to help me right now. You're taking away from some kid out there trying to call in about some real life shit, and you're asking me about if I've peaked and if my hair. I'm not yelling at him, guys. I'm just.
I mean, you are yelling at me.
I'm not yelling, caller.
You are yelling at me. So let me ask you. Have you not been lashing out at chat today?
I'm not lashing out. I'm literally doing the same thing I do every day.
So you're being angry?
No.
I mean, that's exactly what's happening right now. I mean, I'm trying to sit here and talk to you in a calm manner, and you're just projecting on me, and I just don't understand.
Oh, sorry, caller. I think your connection dropped. Let me try calling back. Go ahead, caller. You're on the air.
We live in a high cost of living area, and so that 500 grand is kind of like just over a check. We haven't been totally pre-approved yet, but I've been like my pre-approval was like 570, and so I guess don't know how the market's gonna go. I don't know. I'm just nervous that if we do it now, it's gonna be the wrong time, but if we wait, it's gonna be the wrong time as well.
It all depends. I mean, first of all, I mean, it's really tough. I don't know what kind of, combined income you guys have, but if you only have $20,000 to put down a $500,000 house, you're talking about a very, very low, down payment, meaning that you're going to owe a lot of money. It's going to take you a lot longer to pay it off. And you're probably going to get hit with a higher interest rate because the more money you owe, the more risk you are. And the more risk you are, the more they want to, guarantee their money's returned or at least make a profit before they shut you down. So that's a bit of a concern. Now, your only other options are either move, get a cheaper house, or continue to rent and wait. So I don't know what is the best opportunity for you guys, but that is a lot of money to have to owe over a 30-year mortgage. Did they tell you what kind of rate you were looking at?
So when I was estimating online, it said 3.6.
3.6. Jesus Christ. $480,000 left over at 3.6 over 30 years. You live in Canada?
No.
Oh, God. Are you U.S.?
Yeah, I'm Boston.
Oh, well, that should give you a reason to move anyways. You think I'm kidding? Oh, no, God.
And so that's the other thing, too, is like we're not in a rush, but everything's so uncertain right now. I'm just nervous.
I mean, yeah, I know, I mean, it's very uncertain right now, and 3.6 is really, really high. So I'm trying to understand, like, why is it so high? I mean, it's probably because you guys are putting such a small down payment down. Now, the counter argument would be, well, just wait until you have more money and do a bigger down payment. But, you know, you might be renting forever and spending all that money you could be using on a down payment. Now, obviously, you're also talking about the old argument of, well, if you're renting instead of owning, then you're just paying someone else's mortgage instead of your own. Well, that's a great argument, but at the same time, you're living in a very high cost of living area with high property taxes, so you're going to be paying non-returnable capital probably equal to whatever your rent is anyways during that time. So I don't know. That's a really, really tough call right there. I personally would not. I don't know. That's a lot. You're paying only $20,000 down on a $500,000 house at a 3.6. Even though 3.6 is not terrible, 3.6 at that rate of how much you owe, and that the interest is owed on is a lot over 30 years.
Okay, so that's good to know because I definitely thought it was low because of everything that's been going on. So today I learned.
Yeah, I mean, I can't tell you what to do, but for me, how much do you pay in rent?
$1,800 a month.
Because I'm trying to think how much you're going to pay in mortgage plus insurance plus mortgage insurance because you're not putting down at least 20%, and then property tax, maintenance. So I'm trying to think of how much more you're going to end up paying, and it's just it's. Oof. Well, you're going to pay more than that because they don't keep in, because remember, you're putting down less than 20% means that you're going to have to pay mortgage insurance. You have to pay your mortgage. You're going to have to pay property tax. You're going to have to pay insurance. You're going to have to do maintenance. If you have something if it's an older house or if it's in a place that has problems, you're going to have to pay for that. You can't call the landlord to come fix it. So there's a lot of pay, issues there. So, I mean, if it was me, are you planning on staying in Boston forever?
Possibly, yes. It's a high probability.
Can you move away and travel?
I don't know what my company's going to do in the next 6 months, to whether or not we're going home, like full home, which totally changes everything.
Yeah. Because I'm calculating it here, and I'm thinking that with everything into it, you're going to be paying between $2,800 and $3,200 a month to own that house.
That's kind of what I'm thinking. That's what I got too. So.
Yeah, and I'm thinking to myself, yeah, that's great that you're paying equity, but that's just the bare minimum. You know what I mean? That's not paying extra against the principal. And I mean, you could basically, rent for another year, put more money away towards a down payment. Maybe the housing prices come down, and then you can put that down. I mean, it's a really tough decision. I don't know. Do you have kids?
No kids. Just the two of us.
Oh man, it's tough. Honestly, a place like Boston, I wouldn't even buy in Boston. I think it's fucking overpriced and shit right now. But I mean, listen, that's what you're going to pay extra. And if that's something you care about, it's because you have the equity within the home and you're planning on living there forever, and you're planning on, then great. As long as nobody loses their job and as long as you have a good support system in case something bad goes happen, then I mean, you're gonna have to tighten your belt. But I mean, that's tough. That's really tough. Like, I don't know what your combined income is, but that's a really tough situation to be in. I mean, if it was me, I'd stay fucking renting for another year, because then I could either move if I don't want to live there anymore. If I lose my job, I can save some extra money and let somebody else deal with all the bullshit. But if you're planning on living there forever, then maybe it's worth biting the bullet.
Yeah, because we don't know what the housing market's going to be in a year, so. That's where my uncertainty comes from.
I mean, nobody knows what it's going to be in, but here's the problem. This is what I've been screaming at for the last, several months, is that housing prices were increasing, but mortgage rates were low. And I personally would much rather take 1% lower on a 30-year fixed mortgage and 20% higher house than 20% cheaper house and 1% higher mortgage interest rate because of that. But with your case, you guys are putting so little down on such a massive house. And can you give me a ballpark on your guys' combined income?
140.
140? So that $20K that you guys have saved combined, how long did that take to save?
I don't know, a couple of years. But I was at a lower paying job for the past few years.
Well, you live in Boston. It's a much higher living area. So 140 is like essentially like making 80 in a lower cost of living area. It's not a lot of. It's not like the people in chat that are thinking, "Oh my God, 140 is so much." It's not that much in a high cost of living area, guys. You guys are focusing on where you live and not where they live. My question is that you might want to spend the next year. I'm not judging you because I don't know your personal life, but it sounds like you might also want to start cutting some expenses, because I'm thinking even in a high cost of living area at $1,800 a month plus all other payments combined, I'm thinking your bills shouldn't be more than $5,000 a month combined, unless there's something else going on I don't know about medical wise. But 5, maybe 6. That means there's 3 to 4K left over after taxes. Well, you live in Boston, so taxes are higher, but even 3K a month that is going somewhere. And I feel like you might want to consider focusing another year of maybe renting and focusing on getting your expenditures and your sacrifice. Because I mean, this past year is COVID. I mean, it should have been a chance and opportunity to stock away all the money in the world, right? Because because you haven't gone anywhere. So I'm thinking maybe you might want to work on building up a lot more money for a down payment, and also working on your expenditures. I don't know where that money's going. I mean, maybe it's going to medical bills and it's serious. Maybe it's going to Uber Eats every night. I don't know.
I mean, the other thing to keep in mind is, like, I've had a job for maybe a year and a half that's paying me what it's paying me. Before that, I was $50K a year. So this is, it's not that I haven't been saving. Is my point.
No. I'm not accusing you of that at all. I'm just saying that, now that you've made that money, here's my thing. It sounds like you're like, oh, I'm making an increased level. Let's jump the gun and let's buy a house now that I'm making this money. And the idea is that that's probably not a good idea. I would say give yourself a year in your new job to make sure that it is solidified, that you've made good networking opportunities, that you have good friendships and relationships there, that you're stable in your job. Because imagine if you jump into buying that house thinking, oh, I've tripled my income, or I've doubled my income, we're going to buy a house, and then all of a sudden you get downsized, or it doesn't work out, or you piss off the wrong person because you're the new person, or they downsize and you're brand new and you're the first to get cut. Now you own a house, you're $500,000 underwater, your income is cut in half, and now instead of renting and being able to move around, you're stuck with this. And let's say the housing market cools off, now you bought at the top and you have to sell at the bottom. You know what I'm saying? Like, there's a lot there that I would probably say, if in my opinion, just a completely objective, subjective, whatever you want to call it, opinion, I would say spend another year renting, keep an eye on the housing market, focus on cutting your expenses down, your extra expenses, save some more money, revisit it in a year when you're more stable in your new job and you have a better idea of your finances and can put a higher down payment on, so that way at least you have equity money into it, and the interest you pay is less. Not only are you going to pay less money on the interest on the house, but you also don't have to pay mortgage insurance if you have at least 20%.
Thanks, Saki. I really appreciate that advice. That's probably what we're going to end up
Not
doing.
advice and opinion.
Well, you got me.
Get wrecked, kid.
All right, bye.
Bye. Somebody said it sounds like the Susie Orman show. The fuck's that supposed to mean? You saying I look like Susie Orman when I shave? Go ahead, caller. You are on the air.
All right. So I'm in a dilemma. So I do a lot of option trading.
Oh god.
But then also, I'm looking for a full-time job for mechanical engineering, but it's been a little bit hard, so I can't find anything right now.
Then build something.
So, what's that?
Huh? Go ahead.
So, but I've been making decent profit from option the last 2 weeks.
Okay.
So I don't know if I should continue trading or find a full-time job.
You should find a full-time job. Do not use the market to make money. Use the market to grow the money that you've already made. Because you're going to end up using it as a job, and then you're going to end up getting desperate, and then it's going to become a gamble, and you're going to be chasing until you're broke, and then you're going to be broke without a job instead of having money without a job.
But I literally can't find any job around here.
Okay, that's fine, but don't think that options trading is going to make you. You could get wrecked in a second, and everything is gone.
Low-key kind of lost a lot from Amazon.
Did you short Amazon?
No, I caught Amazon, but that shit didn't go anywhere. So I was actually down somehow.
Were you playing next day expiring?
No, I was playing May 7th. I did 3,600 call, and I was down 20%. Okay, no more earning plays. No more earning plays. Except Intel put.
Caller, are you high right now?
No.
Do you live at home?
Yes. Yeah.
Do your parents know what you do?
Yeah, kind of.
They know that you sit around in your basement losing on weeklies and listening to me. Caller, have a great weekend. Jesus Christ. I feel like that's 90% of my community right there.
Hello, Stocky.
Hi, caller. How can I help you?
Hi, how are you, man? Hope you're having a great day, bro.
I almost died on stream earlier, but I'm doing okay now.
Glad to hear that, man.
Uh-huh.
Okay, so I have a question.
Uh-huh.
I played the Domino's Pizza earnings,
Mm-hmm.
and they actually they had really poor guidance on the earnings, but somehow the next day the stock flew up after like having a minor dip.
Well, actually, it dipped about 4% early.
Yeah.
Yeah, I had a really big dip, and then something happened. I wasn't paying attention, but something came in. I don't know. Did you do any DD on it to see what the reversal was during the day?
I think it was because the SPY dipped, and I guess Domino's is kind of a boomer stock, I guess.
Well, I saw Domino's come out later in the morning and talk about guidance and how there was overreactions and whatnot. But yeah, their earnings were shit.
Yeah, so like I've been doing quite well on earnings this week, except that one. So like I've been like.
Did you not try selling
like,
it open? Like what happened? Did you just hold too long?
Yeah, I held too long.
So for me with earnings, I generally, if I catch it in the right direction, I generally sell immediately at open or within the first 2 candles, simply because that's the highest volatility volume and the best bang for my buck outside of the stock moving, significantly early in the direction of my play. I would rather walk with my profit and watch more profit just fleet away than to be profitable and then hold for an L. That's me, by the way.
Yeah, okay.
But you can do you, but something like that, I've seen it happen way too many times where I take call through earnings. The thing actually does really well on earnings, and then the next thing I know, it just sells off. I mean, look at every single wow, VIX just jumped. Look at every single person who played AMD through earnings and didn't sell it open.
Mm-hmm.
Every single one of them went from being 100% up to being down like 80% in a matter of 3 hours.
Yep.
And that's what happens. That happened to me. I mean, yesterday morning, I sold my SPY calls for 100% return. I bought them for 175. I sold them for 350. Late, like 2 hours later, they were worth 182. So instead of being up 100%, if I would have held, I would have only been up, 3%. So I generally just get out. I don't want to stick around and wait to see if something's going to happen. I just take my money and walk away.
All right, cool. I'll look to implement that in the future, man.
I mean, it's up to you, or at least set a stop loss, or if it's not moving parabolically in the first 5 minutes, then think about dumping it when interest is the highest, because people want to catch it on the way up. I got caught in that with Twitter yesterday. I bought Twitter early after the first dip, and it started moving back up. I caught in. I got filled at a market order instead of a limit order, and then it ended up dumping. And the guy who sold to me was like, "Ha, stupid kid who bought my Twitter call." That was me. So just be careful. Don't get greedy. I think discipline and is the most important thing when it comes to trading options, especially through events like earnings. So just be a little bit more disciplined. Don't get greedy and walk with your profits. Hi, caller, you're on the air.
I have a question about exiting positions. You always talk about like DCing. I never know when to like leave a position.
You leave a position when you feel that either A, it depends on if it's a trade or an investment. If it's a trade, it's not going against you. If it's going against you, you should have a percentage down that you're willing to let it get to, but not past. That would be an exit. Or if you feel like that capital can be used better elsewhere. That's kind of like what you do with investing too, right? You keep your money in there forever, and then you want that money to invest it somewhere else, whether it's investing in yourself, taking a vacation, whether it's buying a house, buying an asset that appreciates, then you sell it for that. Until then, you just leave it there, right? So the whole point is either A, if it's a trade, you get out when you should already have an out, right? Like an up, a down, and a timeout when you get into a trade. But otherwise, you either say, hey, it's hit my down, the most maximum I'm willing to allow it to be down, or max that I want to hold it for it to be up, or I have somewhere to put this capital elsewhere. But the problem is we have this fallacy as humans where we're like, hey, I just want to keep buying or keep holding because I'm sure I'll get my money back, or I'm sure it'll moon, and then it stays flat forever, and then the position you could have been in moons, and you're like, what the fuck?
Okay, now let me get more specific. So a couple of months ago, I invested in Discover. Mm-hmm. And right now I think I'm in at like 87.50, and I think it's sitting at like maybe like 114 right now. So I'm up like 30% on my investment.
Wait, which
now,
ticker?
I don't Discover. So I think it's DFS.
Okay. You got in where?
87.50.
Uh-huh.
And now I'm up. So I don't know, should I hold out more or should I take profits? I'm just kind of this. I don't know if I feel like maybe I should exit this position, but then if it goes to like 150 in the next year, I'm going to be like, I wanted that, you know?
Is this an investment or a trade?
This is more of me learning still.
Okay, well, I mean, let's look at it this way. You're talking about something that has been bullish, is in a very bullish sector, is going to continue to lease, rent, finance, underwrite for a lot of people. So you've got a lot of upside. So there's a lot of bullish sentiment. The chart is very bullish. It's very bullish, just period, looking at it right now. It looks like earnings came in pretty well as well. You got in the $80 something range, and you have just been doing very, very well with it. So looking at the all-time chart, you know, you're at an all-time high. That's a little bit scary. But you don't want to leave it on the sidelines, or you don't want to sell your position, because what if it goes to 150, right? You don't want to miss out on those profits. However, you've made a ton of money. So my question for you is do you have somewhere else that you want to park that capital, or are you just selling because you're scared of it falling and you losing profits?
I'm probably both. I don't want to miss out profits, but I would like to possibly take the money out that I made and put it into like an ETF, like SPY or something.
Okay, well, how much of it do you want to do that with?
Oh, I don't know. And that's where like my anxiety.
How many shares do you have?
I have 5 shares.
You have 5 shares. So you got in at $400 and you're sitting at $570, something like that, right?
Yeah.
So why
Sounds
not
about right.
sell the $170 worth? So why not sell 1 share now and park it in the ETF? Now you've taken your money that you've made in profit and you dump it in an ETF. If this thing continues up and you get it to 125, why not sell a second share? Why not leg out and put that somewhere safe? That way you're still playing with your original investment and you're just parking your house money.
Sounds good. I like that.
I mean, that's what I would do. You have 5 shares. You're up, you know, sell the equivalent of 1, or sell 1, which is the equivalent of everything you've made. You're still riding 4 shares, but you've parked your profit away. And if it goes up again, you sell 1 more share at 125. And if it goes up to 135, you sell another share. 145, you sell another share. 155, you sell the last. I mean, leg out, you know, take that money and be smart with it.
I like that. Yeah. Okay, cool. I'm going to do that.
All right, caller. Have a great weekend.
You too. Thank you.
Bye, buddy. Go ahead, caller. You're on the air.
Well, I don't really have a question. I have 2 other things for you, though.
What's up?
One, great job yesterday. I thought you were very professional, and you still remain true to your goofy self, though, and I liked that.
Caller, are you about to offer me a blowjob or something? What's going on?
No. 2,
donated $5.
thanks.
Love your work. How much
as
does it
you're
cost
one of the
to post my
faces
logo on?
of the kind of representation of us, I thought you did a great job at that. Thanks for portraying the Twitch community, small guys, retail investors. You portrayed us well. Thank you.
But
No but. That's it, dude. Good job.
I feel like there's something happening here.
No. I feel like sometimes you're underappreciated. And just from me, thanks.
Oh, well, in this case, thank you, caller. That's really nice of you to say. I don't feel that I'm deserving of that, but the fact that you said that means a lot to me. Thank you so much. I don't know if I'm the best representation. I know that there's many people in this community that don't feel I'm the best representation, but if you're being honest, thank you very much for those nice words.
Being honest, I mean, you're one of the representation. You made it onto CNBC. That's huge.
Made it. I felt like that was a downgrade.
Oh, and you did it, and you did good. So thank you.
Oh, well, thank you. Also, I'll send you the money in a little bit. Holy shit, I just made some money on MVIS too. All right, caller, thank you so much for calling in, man. That was really nice of you to say, and I wasn't expecting it, but thank you, man. Have a great weekend.
Well, bye.
Jesus Christ, I wasn't sure what was happening there. I thought I was about to get trolled hard. How much did he get paid? Tell me so I can call in too. Okay, dude. Go ahead, caller. You are on the air.
Hi. I have a question for you.
What's up?
So I have a TSP account. This is my first full-time job.
Uh-huh.
And currently my money I deposit and my employer TSP contribution, which is, the government, goes into life cycle funds.
Okay.
So I guess I don't really know the difference between life cycle funds and individual funds, and if I should transfer them from life cycle funds into individual funds. Does that make sense?
Yeah, I mean, the problem is life cycle funds in Canada are basically target date retirement funds like in the US, right? So safer, I guess. I don't know. I'd have to look at your individual fund or the funds that you have. Have you talked to the guys in the Canadian channel?
No.
Because the problem is that if you are in a life cycle fund, it's a very, very slow grower. And it is good. It's like it's good if you want to be safe, but if you are looking for something that is a little bit more aggressive, then you might want to allocate it yourself rather than allowing it to be allocated for you.
Okay, well, I'll go talk to them Canadians then.
Yeah, I only say that because I don't want to say, because like, for example, there's certain things that Canada has, like, for example, capital gains tax in Canada, right?
Okie dokie, thank you much.
All right, caller, have a great weekend, and I do apologize.
For?
That you're Canadian. I'm sorry.
No, I'm living in Minnesota.
Wait, you're not Canadian?
No. No, I live in Minnesota.
I thought you said you were Canadian.
No.
Oh, TSP. I thought TSX. I was thinking the Canadian exchange. Oh my God. I am so stupid. Bro, I am so sorry. I'm fried. I thought you were Canadian, and I was like, oh God, I don't want to answer a Canada channel. Bro, I am so sorry. TSP. Oh my God.
I was like, I'm sure the Canadians can help me.
I was thinking that you had the equivalent of a life cycle fund, and you were asking me what you should do. Okay, let me get back to what I was saying. Okay, I'm so sorry, dude. Well, you're Minnesota. It's the same thing as Canada. Whatever. Let me get back to what I was saying. Yeah. So, like, basically, what I was saying is if you're in a life cycle fund, it's a target date retirement account, and it's basically passive investing, right? You're gonna just kind of like, you can allocate it depending on sector and kind of like what size you want and what kind of exposure you want. If you're passive, there's nothing wrong with it. It's going to cost you a little bit more, generally speaking, but there's nothing really, really, really wrong with a life cycle fund. If you, like I said, if you want to be passive. I mean, how long have you been like into the stock market?
I have only started at my job since September, and I only started doing like on the side personal trading since January.
Okay, and how old are you?
I'm 24. Okay, I don't sound like it, but
you got plenty of time. Are you setting up a target date for retirement and like, basically, what, for those who don't know, what you do with a target date retirement is you basically say, this is how much I want by this time, and it basically helps you allocate that. So what are you looking like? I'm trying to decide, like, are you trying to be aggressive? Are you trying to be safe? Like, what is your idea?
I like, for my retirement accounts, I'm trying to keep those safe, but right now I'm just kind of playing around and learning the stock market. So like right now, almost like half my portfolio is in AFA, and I'm probably going to sell that today.
Half your portfolio is in AFA?
Yeah. And my average cost is only $16.33, so I might just cut my loss and move somewhere else with that because I'm done bag holding this.
Yeah, that's a tough one to hold because everybody wants to think that it's going to pop, but it's just been flatlining for so long. But you know how it goes in the stock market. The moment you sell it, it moons, and the moment you buy it, it falls. That's how it goes.
Chat.
I mean, who do you have it through? Do you have it through Vanguard?
No, I'm just a degenerate, so I'm using Robinhood. So because I'm just practicing. But I should probably
you got a government job though, right?
Yeah. Yep.
Do they offer a pension?
I don't actually know. I'd have to look into that.
Well, that fucking changes everything. You have to understand, if you have a guaranteed pension coming in, you can YOLO every day the rest of your life and not care because you're gonna have a guaranteed paycheck coming in. If you don't, you need to. Oh my god. Probably not. If you're not aware, you probably don't.
Yeah.
Because that's usually something you know when you get hired at the government. Caller, I'm sorry. I didn't mean. I for some reason thought I was thinking you were Canadian. Yeah, no. I mean, target date funds are great if you want to be, like I said, if you want to be conservative and you just want to like allocate it, forget about it, give yourself a time frame and an amount of money, and just let it kind of add to it. It'll tell you how much you need to add based on so many factors, the algorithm, everything like that. That's great if you want to be more hands off. If you want to be more hands on, then no, target date is going to be a little bit waste of a time. But you know, it's up to you. Check and go find out if you have a pension.
All right, I will.
That's your homework this weekend.
Oh god.
Yeah, trust me, it's worth it. Goodbye, caller. Go ahead, caller. You're on the air.
Awesome, cool. So I work for a large defense contractor, and I will not name them so I don't embarrass myself here.
Gotcha.
But they've been having a rough past few years, to say the least, and they're not doing so hot right now. And so this year we didn't get any raises. They gave us RSUs instead, and the RSUs don't vest for another 3 years.
Oh.
But the way they've sort of described it to us is we can take the RSUs early, or at least part of the RSUs early, but we'd be taking a penalty. So like after a year, I could take a third of them, it sounds like. Now, I'm not super confident in this company. So I'm thinking it'd be worth it maybe to take the third after a year and then invest them in something else and hopefully outperform the stock that they're giving us, or should I just hold on to it since it's basically free
that's a
money
tough one. I mean, it depends on if they've been beaten down, if they've got a future, if there's something that they could gap up. You said that they haven't performed well, so I'm assuming that the stock is also down. Defense isn't going anywhere, but it depends on what kind of defense it is. Like, is it like fucking missiles? Is it software? Is it planes? I don't know. And obviously, you're not going to dox yourself because I don't want to get you fired from the government. But generally speaking, if they're not giving you a raise and they're giving you shares, that's not normally a good sign unless it's because it's like basically like them giving you a convertible. It's like getting convertible notes, right? Like, hey, you can have these convertible notes and give them back at any time, you know, whatever, and get the money. Are you planning on staying with the company or moving?
No, so I'm trying to stay with the company. And I definitely think I'll try and stay with them for at least another couple of years. I think that the stock was definitely, I think, going to go up, but I just don't think it's going to go up as much as like a lot of people are like, oh yeah, we're going to get back to where we were, which would be like doubling or something insane like that. I don't think it's going to happen. But I don't know. Like, I don't know it well enough. I don't know enough information about it. So I'm like,
I mean,
do I hedge my bet
without
and just go
doxing you,
or?
I don't know what the company is, so I can't really give you a lot. But I would say this right here: if it's a major defense company that's probably going to come back, here's the problem. Yeah, you're not getting a raise, but do you need a raise right now? Is there like anything in your
No, not at all. No, I'm totally doing
so
fine,
if you
like financially and everything.
And you have 3 years to go, and it's a company that you think is going to do well over the next 3 years, there's nothing wrong with letting them sit there. The problem, how big is the penalty?
I think it would be like I'd get like a third and then have to pay taxes on the third of it that I get. So I'd have to, you know.
But you said there's a penalty if you vest it early.
Yeah. Instead of getting, I think it's supposed to be like 50 shares, I would get whatever 50 divided by 3 is and probably rounded down and then have to pay taxes.
Wait, so if you withdraw it early, they take away a third of it?
Yeah. No. I only get a third of it if I take it out a year in, right?
Oh, dude, don't touch that shit. Don't touch that shit.
Okay.
Don't fucking touch that shit. Do not touch that shit. If it was like 10% loss or something, no, but you said you only get to keep a third of the shares and pay taxes on it. Dude, there's no stocks out there that are going to give you a guaranteed 66% return out there that you don't even have to worry about. Pretend that these things don't exist. I want you to take these vested shares. I want you to delete it from your mind. In 3 years, set yourself a reminder to cash out. Okay, you don't have this money. You never got this money. It's $100 bill that you put in a coat that you hung up that you wore at your wedding that you're not going to revisit for 3 years. And oh shit, I found $100. That's what you're going to do. Do not touch those. There is no way. I cannot think of a single a single scenario where you take that out at a 66% loss plus taxes, reinvest it, and make back everything plus a profit.
Okay, cool. Thank you so much. And then also real quick, while I have you here, I just wanted to thank you for all of the life advice you've been giving us. I've definitely lost money on the stock market trying to shadow you, but I'm learning to do that better now. But also, if you helped a lot with like, you gave me some relationship advice last week, and that ended up really working out really well. I might have a girlfriend now, thanks to you. And then also I went and got my ADHD checked out because of you, and it turns out I've had ADHD this whole time, and like now I've got stuff to like help me with that. So thanks for helping get my life put back together.
Caller, you did that. Don't give yourself 100%. Nah, I'm just some idiot on the internet. Listen, give yourself the credit for that. Congratulations, dude. I'm glad things are working for you. Keep it up. And don't shadow me.
Welcome,
because like I said, I'm gonna have
I stopped shadowing you and the losses stopped. So
yeah, because the thing is, if you shadow me and you don't get in out same time, or you don't know what I'm doing or you're doing, even my wins could be losses for you. I just want to show you guys what I'm doing so that you guys can figure out how to do it on your own. Don't shadow me. I mean, if I can help give you an idea of something to invest in or a play, that's great. But don't try to copy me, because it's very, very difficult to copy somebody who's doing it live and dynamically like that. But listen, forget about the money, dude. For everything that you've lost, you've gained 100 times more. So I'm happy for you, man. Have a great weekend.